right, let's get straight into the criteria on how we're ranking these income ETFs. This is the third installment of the power rankings, so you guys should be getting more and more familiar. So the first thing that I use in my methodology is I look at NAV erosion. I do not want my ETFs to be going down and down in share price every time they pay a dividend. If they're just going to return my money back to me, what is the point of investing? I don't care what other dumb YouTubers say. NAV erosion is a real thing, and it will destroy your investment returns and your wealth over time. So you better be keeping that NAV up, or you need to be maintaining it every time you pay a dividend. So that's something I look at. 2 is price appreciation. Now, I'm not expecting these stocks to light the world on fire. It's nice to get a few percentage points every year. But again, as long as you're paying out a nice juicy dividend and the price isn't falling, I don't really need that much price appreciation. That's really just the gravy on top. And then, of course, those dividends have to be factored in when we're talking about income ETFs. I love getting that cash flow every single month, or as we're about to see, some ETFs are now paying out weekly. Gives us a chance at getting that cash flow every single week now. So juicy dividends, always a plus, as well as a history of these ETFs, right? So something that came out last month will probably not rank as high as something that's been consistently giving out dividends for the past couple of years. And then we will also be ranking this in combos, so JEPI and JEPQ will fall under the same umbrella rather than being on here 2 different times. And then the performance since July 14th, that's the last time that I put out a power rankings video. Yes, I've been very busy. That is what gets extra emphasis when we're looking at performance. So that's what I'll be giving all these percentages of how they did since July 14th. That's what it's based off of. If you're wondering what a good barometer on how long it's been since July 14th, well, July 14th was the day before Trump got shot, his assassination attempt. So you know exactly where you were that day when you heard the news. So that's what you could use to judge how long it's been since July 14th. Also, of course, the more and more subscriber engagement I get in the comments, the better these income ETFs will do in future videos. Guys, I do not have time to research and look at every ETF out there. I learned so much by reading the YouTube comments. So there's some ETFs in here that I'd never heard of until people mentioned it. So the more and more people leave a comment, talk to me about these ETFs, tell me what you like, the more I consider those when I'm making my power rankings. It helps me narrow down some very tough choices just because there's so many different income ETFs out there, guys. So be sure to leave your comments on how these ETFs are doing for you and which ones you like and which ones I may have missed. So let's get straight into the ranking. Number 8, YieldMax, NVIDIA, YieldMax, Coney. All right, guys. I didn't really want to put YieldMax on this list, but I knew their supporters would be all over me in the comments calling me a YieldMax hater if I didn't include at least one of their ETFs. So the one that everybody wants to talk about is NVIDIA, which has done pretty well since their inception, up 28%. Of course, NVIDIA has done very well in that same time span, paying out a super juicy dividend. Can't deny that. So since July 14th, NVIDIA is down 11.2%, and their most recent dividend payment was 4.34%, which is very good. So if we annualize that, you're getting close to like a 50-60% yield. Certainly cannot complain about that. So NVIDIA still looking pretty strong. It has had some NAV erosion recently. Just keep that in mind. Now, the other one that people always talk about is Coney. Well, guys, how's Coney doing for you guys recently? In the last time that I made this video, Coney is down 24%. It's down almost a quarter of what it was when we last made this video. Its dividend has also been collapsing. It's down to just $1 a share, guys. That is not very good. Imagine if you were trying to live off dividends and your dividend income gets cut by that much. Now, am I being too hard on Coney? I don't think so, because Coney supporters despite numerous warnings from me, were always like,
I am going to retire off a $100,000 portfolio of nothing but Coney stock. I will always get giant dividends from Coney. There will be no such thing as NAV erosion. And I don't care what you say, Cody.
I'm going to retire super early with all these dividends every single month. You're just a hater. Well, guys, this is why I make these videos. I'm not here to be your best friend. I'm here to tell it how it is. This is exactly what I feared for. When there's extreme levels of volatility, sure, you might get some juicy dividends as a offset for that, but you're also going to get big price swings. Companies such as Coinbase is going to have huge price swings. If you play stupid games, you're going to win stupid prizes. How have the other YieldMax funds performed? Well, YMAG is down 10.3% since the last time I made this video. The dividend has also shrunk just a little bit. YMAX is down 11%, and the dividend has also shrunk from the prior month. All right, enough talking about YieldMax. Number 8, ZIVB. All right, this is one I've definitely never talked about. And this is one I only learned about from the comments on my last video. So thank you to all the people that posted about ZIVB in my last video. I'm not going to explain what this fund does right here, but it does a negative 1x short on the VIX midterm futures strategy. I'm sure you're very confused on what that means, as am I, but it's somewhat similar to SVOL in the way that they are aiming to deliver the opposite return of the index daily. Again, it works in many similar ways to SVOL. It's harvesting the roll yield of the VIX futures curve. This fund has actually been around since April of 2023. I definitely have never heard of this until like a month ago. And it's actually up 45% since it launched, which is super impressive, right? Especially when you're giving out an 18% yield. Sometimes that's closer to a 25% yield. So this could be another income ETF for people to get on their radar. It's super small right now. Assets under management, only $11 million. That is super small. That's probably why most people have never heard of this ETF. So if we go to the dividend payout, go to that dividend history, we will see that they have been paying monthly dividends since December of 2023. They have been paying that 48.5-cent mark very consistently. So I'd love to see that. They've had a very impressive history here. So ZIVB at number 8. Number 7, SVOL, Simplify Volatility Premium ETF. All right, you guys know the drill with SVOL. They have a short VIX position. They have VIX call options for protection. So this was maybe the first true test of how SVOL would perform under times of duress, when the VIX volatility would just absolutely spike here that we did have at the start of August. And SVOL actually recovered very well. I was very impressed with their performance. So we can see here it had a huge decrease in a very small amount of time, but then it recovered very well. It's already back to around where it was prior to that little dip. So a lot of people are like, oh yes, this is a true testament to how SVOL will always perform. And they're saying this about other income ETFs as well. I do want to point this out. Though it is very impressive that a lot of these funds were able to recover and do well, what we saw at the start of August wasn't exactly like a correction or prolonged period of the market being down. Like, sure, the market went down for a little bit, but it like immediately spiked back up. Like, it was not a true market crash. Generally, the stock market does not recover as quickly as it went down. So I'm not sure if this was the true test that a lot of these income ETFs needed to go through. When we have down days in the markets, it usually lasts for a couple months, right? It's not going to last for just a few days. That was just a super speedy recovery. So SVOL giving close to a 16-17% dividend yield. Remember, it's actively managed as a 5-star rating on Morningstar. And so far, it's had a pretty stable NAV in the time that it's been out, been paying out some juicy dividends. Number 6, JEPI, JEPQ. All right, I'm sure a lot of you are going to be shocked to see that JEPI is so low on this list, but it's all for good reason, guys. There's just so many good income ETFs out there. That doesn't mean JEPI being at number 6 makes it a bad ETF. JEPI is, of course, an old timer, been around for years, and it has delivered impressive results, right? This $35 billion in assets under management is super impressive. A lot of people trust their money with JEPI. So let's look at their performance here, guys. So in the last time that I made this video, since July 14th, JEPI was up 3.46%. However, it did pay another super small dividend that was just 28 cents the last time they paid out a dividend. It continues a streak of declining dividend payments for JEPI. That's where I had to dock them a little bit. Now, their other fund, JEPQ, unfortunately did not perform as well. In the last time I made this video, the fund was down 3.15%, and their dividend has remained pretty stable, almost unchanged since last time, just under that 10% yield. You kind of know what you're getting from JEPI and JEPQ at this point. They do a very good job at maintaining that NAV and paying out dividends. Number 5, RecShares, FEPI, AI Pi. All right, I think this is probably the biggest shock for most people. FEPI actually came in at number 1 last time we did these rankings. And unfortunately, they fell all the way to number 5 this particular month. So FEPI was down 9.12% since the last time we made this video. Of course, there's been a lot of market volatility with the tech sector, but I actually think a big reason why FEPI has went down so much that people are not talking about is that, keep in mind, FEPI only owns like 15 companies. And one of those companies is Intel, which went down like 25% in one day after they had their earnings. Now, that is not everyday activity. The companies that FEPI owns are usually very high quality, super large market cap. They're not going to go down 25% very often. This was more of a one-time outlier. I wouldn't expect that to happen. This is also some of the downside of owning ETFs, right? Is that you lose that power to pick the stocks that the ETF has in their portfolio. Like if I was picking my own portfolio, there's no way that I would want Intel in there, guys. But if we go to their holdings, they still have some very good companies in here. Palo Alto Networks, Adobe, Netflix, Apple, AMD, NVIDIA, Broadcom, Amazon. You can see here, guys, Intel made up 6.67% of the portfolio, and that definitely did contribute to some of that NAV erosion we've been seeing. We're getting pretty close to FEPI's first birthday. They've only been down about 1%, so really not much NAV erosion there. They've also paid a super juicy dividend of close to 25%. But I am a little bit disappointed in the capital appreciation prospects for FEPI going forward. I mean, keep in mind the stock market has done very well since FEPI's came out, yet the actual NAV has not went up as much as I would have liked it to. I think a lot of us were thinking there'd be a lot more capital appreciation with FEPI. Their other fund that just came out, AI Pi, has been down so far. They've paid some juicy dividends, 2 consistent dividends so far, on pace for a 34% yield. So far is down 6.67%, or since the last time we actually talked, it's down 11.79%. So the jury is still out on AI Pi. It's not been out for very long, only since the start of June. So we'll keep an eye on it, see how it does. Number 4, NEOS, SPY, QQQI. All right, guys, this one is pretty straightforward, pretty simple. SPY down 51 basis points since my most recent video. Its dividend was also 5 cents higher than the previous month. Then we got QQQI. It was down 3.9% since we last talked, and the dividend was 3 cents higher than the previous month. So SPY, QQQI, covered calls on the S&P 500 and NASDAQ 100. They have a very stable NAV. You can see here for SPY since the time that they've been out, it's actually up 4.1%, and it's been around for over 2 years, just celebrated its 2nd birthday. You can see assets under management continuing to grow. They're almost at $2 billion. Got some decent ratings here on Seeking Alpha, monthly dividend payments, opportunity for some upside. Very impressed with SPY, NEOS products. Number 3, Roundhill, XDTE, QDTE. All right, well, is there any ETF in our community that has gotten as much attention recently as these weekly payers in QDTE and XDTE? In fact, Roundhill just announced plans that they're going to launch a bunch of weekly payers going forward. So this is the first time that they've actually appeared on this list officially. They were an honorable mention last month's video, but I'm not going to lie, I'm pretty impressed with how this 0-day out-of-the-money call options on the index fund has performed, right? So they haven't been around for too long, only since March, and they have been rapidly growing their AUM, or assets under management. People, again, have been talking about this company nonstop. We can see since it's been out, it's down about 7%, but it's been paying some juicy dividends. We're talking 34% to 67% yield. That depends on if you're an XDTE or QDTE, but that is very impressive. I have been very impressed with how these two ETFs have been performed, as have other people. Now, of course, that doesn't mean these don't come without risks, right? Just because they've done well in a short amount of time. I've already seen people putting out ludicrous videos saying, and of course, keeping up with the usual degenerate behavior on YouTube, new funds that have just launched that are not time and tested and have juicy dividends that have not even paid out for a full year. What do people do with this juicy combination? Well, of course, they take it to the extreme. They make videos saying that they're going all in on these income ETFs that have just been out since March. Guys, in what world is it a good idea to put all your life savings, everything you have worked hard for in life, on unproven investments? Like, these funds have not even been out for 6 months, and people are already going all in on them. Also, I keep seeing every week there's like a new YouTuber that comes out just living in their parents' basement and talking about how great weekly dividends are and how they're greater than regular growth stocks or just traditional dividend stocks, really. And then they keep emphasizing the dividends get paid out weekly. I'm going to deliver some news that you guys probably don't want to hear. Guys, how frequently an ETF pays out dividends is not that important. Like, it is the very bottom of the list of things to care about when analyzing a good investment or a good ETF. Like, people are putting so much weight on how often XDTE pays out dividends. Like, it's great to get weekly dividends. Don't get me wrong. I understand they want to cash flow a little bit faster, but there are so many different criteria that you should be going through, such as that list I went through at the top of this video, right? Are they maintaining that NAV? Do they have a good strategy? Is it going to work in the long term? Have they actually been through a recession? And I'm not talking about a recession that lasted a whole 24 hours like we did at the start of August, right? These are all important factors and questions to ask yourself. The frequency of the dividend payment, I don't care if they pay out monthly or quarterly or annually, right? Just give me those dividends. I've been getting a pretty good chuckle recently when certain YouTubers are like, we have been threatening Jay from YieldMax that if he doesn't come out with more YieldMax products that pay out dividends weekly, we are going to be taking our business elsewhere. Oh my gosh, guys, there's so many more important things to consider with an ETF than just how frequently those dividends come out. Just do this thing called learning how to budget, and you won't have to care about how often they pay those dividends. All right, we've talked about this for too long. Let's move to number 2, ProShares iSpy IQQQ. So iSpy is up 16 basis points since the last time we made this video. IQQQ is up 4.74%. IQQQ is down 4.74%. So IQQQ just paid out a massive dividend. I almost could not believe my eyes when I saw this. They paid out a dividend of 82 cents. That was more than 2 times their prior dividend payment. Now, iSpy also paid a massive dividend. That was over 2 times larger than their most previous dividend. If anybody knows the exact reason why this dividend was so fat, please let me know in the comments. I suspect it had something to do with earnings season, obviously more volatility around there, and that really got reflected in how massive that dividend was. Again, for tax reasons, most of this will be return of capital, But if the NAV can be sustained, it's not the worst thing in the world to get a rock distribution. So IQQQ over time, guys, it's only been around since March, but it's done pretty well here, guys, giving us a pretty solid, juicy dividend yield in that 9 to 12% range between iSPY and IQQQ. It's able to capture some of that upside more than other covered call ETFs. All right, and that means you know what number one is. Goldman Sachs, GPIQ, GPIX. So again, this has to be the cream of the crop here. Number one in getting us that juicy capital appreciation and paying out monthly dividends. I know the dividend is a little bit smaller than other income ETFs, but we're getting around that 6 to 10% yield. We're getting no NAV erosion. We're actually getting a chance at getting capital appreciation, low expense ratio, get exposure to the SPY, get exposure to NASDAQ, and we get paid those dividends. Like, please sign me up. I'm very impressed with these funds' performance. In the past 6 weeks since we made this video, GPIX is up another 60 basis points. It consistently continues to pay 34 cents a month. GPIQ is down 3.44%, but the dividend has remained relatively unchanged since prior months and has consistently been paying around that 40-cent mark. So until another income ETF has better capital appreciation consistently and pays out a solid dividend, I will continue to rank this one number one on my power rankings for income ETFs. Now, I want to hear from you. Were there any ETFs I missed, or were there any ETFs that I ranked that you would rank maybe higher or lower? As always, guys, we have some great conversations going on in the Discord where you're able to discuss with other like-minded investors on your investing strategies. Be sure to join the Discord in the link below. Leave a like for a small-time YouTuber. Leave a 5-star rating if you're listening to this on podcast form under the Collect Cash podcast name. Thank you to all my Patreons for their continued support, and I will catch you on the next one.
The reason we know how to use margin because we know how to use margin. Because you don't know how to use margin, well, don't put it on us. Don't even ask us questions.